Guys, it's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, I know I haven't made some video updates recently, but if you have a look at the price action, guys, look at this. There's absolutely nothing going on. We are just slow crawling sideways, kind of just waiting to see what happens come Monday. However, there is something that I do want to talk about that is a little bit worrisome, and that is this 7-year trend that Bitcoin has had on these lows right down here, and you could see that currently we are potentially pushing below this legacy trend line. So how bad could it actually get for Bitcoin? Should we be worried, or is it just because of what is happening right now with the global economic climate? Well, I do want to talk about a potential worst case scenario, but don't get freaked out, guys. It's not about being bearish. It's about paying attention to the macro trends. And let's be honest, the game has absolutely changed for Bitcoin. This is a situation we have never seen Bitcoin ever react to before. Now, a lot of people, they do have their eyes over here on the DXY, which we'll get into in a minute. And the biggest question is, when is the Fed going to pivot, and when will the DXY actually officially top out, right? Because that would be very good for Bitcoin. However, there is one very important aspect that so many people, in fact, the majority of people, actually have completely wrong about the situation at hand right now. So I do want to break that down a little bit, keep today's video a little bit shorter. There's really not a lot of news or technicals to go over, but there is something extremely important that I feel like we need to explain. And if that sounds good to you, my friends, thank you again for coming back to the channel. You guys rock. You are troopers. You are sticking it out to the end. Bull, bear, that's what I like to see, guys. So let's hop in. Let's have a look. And of course, if you're not subscribed, well, you guys know the drill, right? So first of all, let's just get the obvious out of the way. We're in a downtrend. We're in a bear market, right? But we are in this giant falling wedge. Now, falling wedge patterns are bullish patterns, right? This falling wedge pattern, essentially, you can go back to here if you want, January of 2021. So this is telling us that once we finally do have that reversal, who knows if it's going to be this year or next year? Could we continue lower? Could we go down to these levels? Yes, anything is possible. But this is showing us that when we do have that breakout, it is going to be a massive, huge move for Bitcoin. Now, on the short term, however, okay, just to point out what is happening, and I've pretty much pointed this out multiple times to you guys, but we are still holding right here on this inflection point. You guys can see right here where we're having this bounce, where these 2 points are intersecting. So that is actually showing that, technically speaking, we are actually respecting these levels, right? So you could say that that is good for Bitcoin. But what are we doing here? Well, essentially, this was a bit of a bear flag, you could say, right? Which is bearish. We fell out of it here. We lost the area around 20,740, but we're still just hanging out here at the bottom. We kind of keep retesting it and consolidating. So it's scaring people because they're thinking, are we going to do something like we did here, where we came down, consolidated, and then just came lower? Is that the case here? Consolidate and then go lower. Well, the problem with this particular level of consolidation is that if Bitcoin does in fact fall below this level, well, we know that there's not much really below this area, right? We end up coming down to this wick, which really doesn't have much significance at all. And let's be honest, guys, we talked about the most significant level for the Bitcoin price, and unfortunately, it is actually well below 17,000. If you don't know what I'm talking about, watch my previous videos, but we'll get back into it into a second. But nevertheless, guys, you really, really, really don't want to lose this level around 19,457. If we do close below that, it does risk easily having Bitcoin come back down to that $17,500 level. So that's the bad news, okay? That's the bad news. So if you want to look at the good news, if this happens, obviously getting back into this trend, closing above 21,742, which would be this area right here, right, where we had resistance, and then resistance again. A little bit of a fake out down here, but this level would be the most important. So close above 21,742, and then, yeah, the next level would probably be to the heart line right here, which is around 23,706. So as you guys know, if you are interested in trading, make sure that you check out the tutorial popping up above, over $15,000 in bonuses below, and make sure you get subscribed to the channel, as I will go over everything as I see it. However, right now, not really much happening, very boring, right? So kind of in that neutral area. We will wait for that big move come Monday, but getting back to this historical level right here, Now we have officially had 3 points of contact, right? So 3 points of contact makes it a trend, right? 1 point of contact, 2 point of contact, 3 points of contact. This is a trend. Officially, textbook, a trend, right? So this trend has been going on since August 1st of 2015. So August of 2015, this is 7 years of data. Bitcoin has never fallen below this trend line ever since we started in these multiple bear and bull cycles. And if we zoom in right here, you could see very, very clearly, guys, that we are actually below this level on the monthly. So this is something that we haven't done in 7 years. Now, it doesn't mean that we're going to close below this, right? We could have, a pump potentially and, have the candle come up here. But unfortunately, we do know that September tends to be a bearish month for Bitcoin and stocks and really equities, everything in general, right? So ultimately, we do want to close above that level. So what was that level that we were talking about? The worst case scenario. Well, I've told you guys that I believe it's between 13,800 and 13,900. And the reason for that is because this is a psychological level right here. The $20,000 Bitcoin top, it's psychological. It's not really that important when you look at it because we didn't even stay there that long. We went to 20,000, stayed there for like a day and a half, and then that was it. It was over, right? Really, this candle close body right here, very, very, very significant. And the fact that we attempted to wick up to that again on multiple times, right? And I guess you can count this little area right here, not as significant as this and this, but this is why this level right here, granted, now we're having the interaction this time around, right? But previously speaking, that was not the most important area. The most important area was that $13,800, $900 area. Now, one thing that I do just want to point out, something that we've never seen before for Bitcoin, this is over on the weekly chart, and this is the entire history, of Bitcoin on the index using the market cipher indicator. Now, remember, we did get that green dot indicator, but remember, a lot of these previous indicators that show us, we're at a bottom, all of these indicators have existed during a traditional equity bull market, right? So we've never really seen how they react in a bear market. Now, some of these indications have been great. For example, this blood diamond, it's called a blood diamond, but really it's just this indicator that tells you that we could be looking for a massive sell-off. And in all fairness, it really called that. Look right here, right? So Bitcoin was sitting at around 46,000. And since that blood diamond, we did see a 61% crash all the way down to the bottom. So that actually was a good indicator. But what are we seeing right here? We're seeing the first ever yellow X on this indicator. Now, you'll see this a lot on the lower time frames, but we've never seen it on the weekly. What does this mean? Well, it actually signals potential manipulation. So obviously, it's a very, complicated sort of algorithmic calculation that I'm not going to go into. Essentially, it just spits out this yellow X to just tell you. But what it is telling you that something seems a little fishy about the price action right now, right? And we've never really seen that ever. First time. So why is this happening? Well, we're going to go into that in just a minute. And by the way, guys, if you do want to get Market Cipher, I do highly recommend it. It's a really good indicator, especially when we're in strong trends. If you do want to take advantage of that, check the link below in the description. Unfortunately, it is not a free indicator, but it is a very, very useful one if you do want to check it out. I like referring to it from time to time along with my regular analysis as well, right? So moving on to the big elephant in the room, we do have the DXY, the Dixie, putting in all-time highs, going parabolic right now. And not only that, we are actually touching some major resistance right now. Now, we've already attempted to touch this twice right here. You can see we have put in a new high. In fact, we've put in the highest level, essentially that we've seen in quite a long time, pretty much since around September of 2002. This is the highest. So basically in like 20 years, the highest it's been. So the dollar's looking strong, not looking good for other things, right? We're waiting for it to come down. Now, something I want to point out super quick though, just keep this in mind. So look at this trend. The dollar has been trending up. Now let's take this point right here. When was that point that I just circled? That's November 21st of 2005. Now, I want you to think about something. Bitcoin did not exist in 2005. And yet, look here, we put in a higher high, which means that even though there was this consolidation and the dollar did go higher, Bitcoin still outpaced it in that time period, right? So what is this telling us? Well, I do want to turn this over to my good old buddy, Kevin Svensson. I do enjoy showing his analysis. He's one of my favorite, definitely, analysts to watch. He talks about mostly macro trends. He doesn't do the smaller time frames, but he broke down why a lot of people have the DXY and the correlation with Bitcoin completely wrong. It's not that the DXY has to top and has to go lower and crash. It just has to do this instead.
Bitcoin's going up, but the US dollar index is still seeing higher highs. You guys see that? Higher highs for the US dollar index. It's actually going up, but Bitcoin's going up. So it's not about the US dollar index going down. It's about the loss of momentum, right? Like look back here in 2011, we come up, lose momentum, go sideways for the US dollar index. And when we go sideways, Bitcoin runs up. 2015, US dollar index is going parabolic. Very similar to now. But once it finds that bottleneck zone and begins to that broadening wedge, it doesn't need to be going down necessarily in the long term for Bitcoin to go up. It just needs the loss of momentum and go sideways, right? The US dollar index can still be seeing higher highs and Bitcoin continues to go up. It's just the idea that it's losing momentum and that cash is flowing elsewhere as it's going sideways. Same thing over here in 2019, higher highs for the US dollar index, right? It's actually uptrending. But what is the key factor for this range here, even though it's going up? Well, it bounced up and began to lose momentum, going sideways. And when that happened, Bitcoin finds a bottom and runs upward, right? Of course, when the US dollar index does go down here, yes, that is the most bullish part of the trend. That's the most bullish part. But my point is, in order to find a bottom, what we need is just a loss of momentum and more sideways action rather than going straight up like we are right now. So I think I explained that pretty clearly. The loss of momentum is the most important part, not necessarily just finding a top.
So as we can clearly see, the dollar has been in an uptrend well before Bitcoin was even created, before Bitcoin even existed, right? But what we're looking for are those sideways sort of consolidations, or we're looking for it to weaken, right? And right now, it is unfortunately looking very, very strong. So it's not so much of, is it going to top out? When is it topping out? It's when does it lose its momentum? And I think that, by the way, that Kevin actually pointed it out, you can clearly see that that is what we need. But nevertheless, guys, the things that have been happening recently with the Fed, the way they've been talking, you can see right here, look at this candle that we had yesterday on the S&P. Look, we opened here at around 39.25, pumped above the resistance level, all the way to 40.11, only to crash all the way back below it again. And why was this? Well, there was some things that came out. There were some rumors. I'm not going to spread those rumors because it's not something I want to do on this channel. If they're confirmed, we'll talk about it. But we had job growth in the U.S. slowing down in August, but remaining strong despite economic concerns and rising fears of recession. The Labor Department report revealed that employers had actually added about 315,000 jobs over the past month. So this is something that you can say is good, right? However, we also did have the unemployment rate increase to 3.7 from 3.5%, slightly higher than expected. So the unemployment rate did go up 0.2%. So really, if you ask me how I feel about this, I'm quite neutral specifically, but here's the issue. Now, obviously, unemployment rate was crazy back here, when we had, COVID crisis, and it has, come down, which is a good thing. But let's just go back to what Jerome Powell said in his speech, right? He said the labor market is particularly strong, but it is clearly out of balance with demand for workers substantially exceeding the supply of available workers. Now, this is from Jerome Powell's mouth himself. And I remember a week ago, some people in the comments were telling me I was crazy, telling you that in the local area, there are a lot of blue-collar jobs that cannot find people to work. I'm telling you because I know a lot of these people. Now, some people are saying that they have to lay some employees off. I don't know. Maybe that depends circumstantially on your location, on whatever the job is that you guys are doing. But you can see right here that Powell is suggesting some softening of labor market conditions would likely be required to bring down inflation towards the Fed's goal of 2%. So a 75 basis point raise is certainly probably likely in the cards, combined with the return of more workers to the labor force, as shown in the participation rate and job opening figures earlier last week. All signs point to a very strong labor market that has yet to respond to tighter monetary policy. But just because it looks like maybe there's a silver lining to the cloud, don't forget that Powell said he doesn't care if they're seeing results. He doesn't care if things look like they might be getting better in the short term. He wants to make sure that they do not prematurely abandon what they're trying to do, right? Very, very important to point that out. And as I did say here, we definitely have to look at the bigger picture. Look, you can see right here, 2008 financial crisis. Look, we have unemployment up around 9.9%. Then we do come down a lot nicer. And then boom, COVID spiked right here. That was crazy, you guys could see. And it has come down. So I really don't think it's as significant as they're making it out to be. But I do know that as long as the Fed continues to remain extremely hawkish, it is unfortunately going to be difficult to analyze some of these previous charts for Bitcoin or look at what Bitcoin did. How many indicators are telling us right now that we are at the bottom? And I do personally believe we are very, very close, if not already at the bottom. Definitely good opportunities for accumulating. But as I said, we've never seen Bitcoin in a situation like this before, right? But I don't want you to think it's all doom and gloom, guys. I just want to be realistic with you. I want to talk about the situation. We're going through this together. This is an experience. And just think about the knowledge that you're going to take away after this is all over. And it's going to be over. It's not going to go on forever. People say, oh, the apocalypse. No, guys, what happened in the 30s and, the late 70s and 2008. We've seen this before, and the economy always corrects itself. And I don't think this time is any different. It's just this time it's different because inflation's at a 40-year high. That's the thing we're talking about, right? It's not like we haven't had inflation up. It's not like we haven't had global conflict and supply chain issues, right? We will get through this, guys. So I want to end on some good news because I am feeling bullish about the overall space, about Bitcoin in general. I'm always bullish about accumulating at these levels. I think anybody buying Bitcoin at these levels is going to be sitting nice and high and pretty when we do break out of this trend. But I just want to point out, if we just look at what's going on with the Bitcoin network, look at the fundamentals, Bitcoin mining difficulty has increased by 9.26%, its biggest adjustment since January. This was the third increase in a row. The network's hash rate has also increased by more than 12% since August 18th. So the growth in hash rate was attributed to a combination of heat waves finally subsiding on a global level and facilities slowly coming online, but also there is a new Bitmain S19 XP miner that is finally hitting the market. So that could be affecting it, now that there's these newer miners. It's, obviously they're a lot better at solving problems. So it's trying to adjust the hash rate, but also, and the difficulty, but also at the same time, it does show you that hash rate is increasing, network difficulty is increasing, which means that the network is not being abandoned. What is happening is some of those miners that, got a little cocky and thought that they could come in and slide in and just make these sick gains, right? They're out of the picture. But nevertheless, the network is growing. The difficulty is going up. Companies are still making these Bitmain S19 XPs. So it's not like Bitcoin mining is going away. It's not like the fundamentals are changing. Nothing about Bitcoin has changed. Bitcoin is still Bitcoin. One Bitcoin is one Bitcoin. But nevertheless, right now, we're going through a little bit of global turmoil. So hopefully that helps to break it down for you guys. You're awesome. I love you. Thank you so much for coming back to the channel. I do hope you found some value out of this video. And if you are looking to trade right now, is kind of not that great time to be trading. Do wait for that move. Wait for that breakout, either to the upside or to the downside right here, right? This is what we're looking for. But if you do want to learn how to trade, guys, make sure that you watch this video, which is popping up right here, right now. Until next time, stay crypto. And of course, you know the drill, guys. Peace out.